Welcome to the market opening bell for Wednesday, August 27th, 2025, your 10-minute guide to the stock market. As markets await Nvidia's quarterly earnings tonight and the US PCE inflation data on Friday, Hong Kong stocks mirrored softer global trends. The Hang Seng Index opened 115 points lower, briefly narrowing its decline to just 10 points and reaching a high of 25,819 before falling sharply to close at the day's low of 25,524, down 304 points or 1.2%. The Hang Seng China Enterprises Index dropped 99 points or 1.1% to 9,148, while the Hang Seng Tech Index fell 42 points or 0.7% to 5,782. Market turnover reached 317.8 billion Hong Kong dollars. Southbound funds flowed strongly into Hong Kong stocks with a net inflow of 16.573 billion Hong Kong dollars, including significant purchases of tracker fund totaling 6.546 billion. Hang Seng China Enterprises ETF 1.78 billion. Alibaba 1.346 billion, Tencent 670 million, Meituan 409 million, Meitu 315 million, and Innovent Biologics 125 million. Conversely, net sales included SMIC totaling $982 million, Oriental Selection 302 million, and Pop Mart 240 million. From a technical perspective, the Hang Seng Index partially filled Monday's upward gap, which spanned 241 points between 25,349 and 25,590. The 10-day moving average at 25,366 near the bottom of this gap is expected to provide support. Mainland Chinese markets initially climbed but later retreated, with trading volume cooling. The Shanghai Composite Index peaked at 3,888 before closing at 3,868, down 15 points or 0.4%. The Shenzhen Component Index hit 12,561 and closed at 12,473, up 32 points or 0.3%. Combined turnover for Shanghai and Shenzhen markets totaled 2.679 trillion yuan, a decrease of 462.2 billion yuan from the previous day. The renminbi central parity rate weakened to 7.1188 against the US dollar, down 27 pips. On the news front, the National Press and Publication Administration announced that 166 domestic online games were approved in August 2025, a 30.71% increase from July's 127. Notable approvals included Bilibili's Escape from Tarkov by Huandian Information Technology, NetEase 天下万象 Alibaba's Master of Masters by Lingxi Interactive Entertainment, Shenzhen Secure Game Networks Go Crew, and Glacier Networks Thousands Machine Array. Seven imported games were also approved, such as Age of Sail Origins, Three Kingdoms, The Way of the King, and Special Forces Assemble. With a total of 173 games licenses issued, August marked a record high for monthly approvals in recent years. From January to August 2025, around 1,100 games were approved, nearly matching the full year total for 2023 one, at 1,075, with expectations to exceed 1,600 for the year, the highest since 2019. As a vital pillar of China's cultural economy, faster game approvals are poised to boost market confidence and aid economic recovery. Smaller developers are gaining opportunities with Bilibili's escape from Tarkov, highlighting innovation by non-major platforms. However, the influx of new games will heighten competition. pushing developers to invest more in quality, marketing, and user retention. Turning to earnings, PetroChina and Sinopec released their half-year results. PetroChina reported revenue of 1.45 trillion yuan, down 6.7% year-on-year, primarily due to falling international oil prices. Sinopec's revenue was slightly lower at 1.41 trillion yuan, down 10.6%, driven by declines in petrochemical product prices and finished oil sales, with its larger downstream refining and sales businesses feeling the impact more acutely than PetroChina. PetroChina's net profit attributable to shareholders was 84.007 billion yuan, down 5.4%, buoyed by stable upstream oil and gas profits of 85.69 billion yuan, though refining profits suffered from oil price pressures. Sinopec's net profit was significantly lower at 21.483 billion yuan, a 39.8% decline, dragged down by compressed refining margins, making its profitability notably weaker than PetroChina's. PetroChina reduced unit oil and gas operating costs by 8.1% to 10.14 US dollars per barrel, and main barrel oil costs by 2% to 27.03 US dollars, demonstrating effective cost control. Sinopec's unit processing cost data was not disclosed, but its overall cost control appeared weaker due to downstream market pressures. On dividends, PetroChina maintained its interim dividend at 0.22 yuan per share, with a payout ratio of about 48%, yielding an interim dividend yield of roughly 3.26%. Sinopec's interim dividend was 0.088 yuan per share, down 39.7% year-on-year, with an interim dividend yield of about 2.2%, significantly lower than PetroChina's. Several companies reporting earnings today, including China Life Insurance, PICC Group, PICC Property and Casualty, China CITIC Bank, CNOOC, China Overseas Land and Investment, Meituan, ENN Energy, Flat Glass Group, Trip.com Group, Suzhou International, Enter Sports, Mao Geping, Mengniu Jerry, Mishe Group, Nayuki Tea, Auntie Jenny, Boan Biotech, Harbour Biotech, Giant Biogene, Innovent Biologics, JW Therapeutics, Textelpie, and Horizon Robotics. For Meituan, second quarter revenue is projected at 93.3 billion yuan, up 13.4% from last year's 82.251 billion yuan. However, non-GAAP adjusted net profit is expected to fall 38.6% to 8.35 billion yuan as the food delivery war in mainland China intensified, with competitors like JD.com offering over 10 billion yuan in subsidies since April. Meituan responded with initiatives like 神抢手, Ping Hao Fan, and large consumer coupons, but its second quarter food delivery per order profit is forecasted to drop 60% year-on-year to 0.74 yuan. In the US, stocks rallied late on Tuesday. The Dow Jones Industrial Average rose 135 points or 0.3% to 45,418. The S&P 500 gained 26 points or 0.4% to 6,465, and the Nasdaq climbed 94 points or 0.4% to 21,544. The Nasdaq Golden Dragon China Index, tracking Chinese ADRs, increased 57 points or 0.7% to 7,986. Nvidia announced a robot brain chip, lifting its stock by 1.1% ahead of its earnings. Apple scheduled a product launch for September 9th, boosting its stock by 1%. IBM and AMD announced a collaboration to develop next-generation computing architecture, integrating IBM's quantum computing with AMD's supercomputing and AI accelerators, with IBM up 1.3% and AMD rising nearly 2%. The Trump administration is reportedly considering a stake in Lockheed Martin, pushing its stock up 1.7%. On the economic front, U.S. July durable goods orders fell 2.8% month on month, following a revised 9.4% drop in June, slightly better than the expected 4% decline, reflecting ongoing order weakness after businesses front loaded imports in May to avoid high U.S. tariffs. Our stock pick today is Yum China, stock code 9987. Yum China demonstrated robust operational resilience and strategic execution in the first half of 2025, particularly in store expansion, delivery business, and digital transformation. On store expansion, as of June 30, 2025, Yum China operated 16,978 stores, a 10% increase year over year, with KFC accounting for 12,238 stores and Pizza Hut 3,864. The company added a net 655 stores in the first half and expects to add 1,600 to 1,800 net new stores for the full year. The proportion of franchise stores is set to increase, with KFC targeting 40% to 50% and Pizza Hut 20 to 30% of new stores, with plans to gradually raise the franchise share within set targets in the coming years. On delivery business, delivery sales grew 22% year over year in the first half, contributing approximately 45% of restaurant revenue. KFC's delivery sales rose 25%, while Pizza Hut's grew 15%, highlighting the company's competitive edge in delivery platforms. On digitalization, digital order revenue reached 2.4 billion US dollars, accounting for 94% of restaurant revenue. KFC and Pizza Hut's combined membership base grew 13% year over year to approximately 560 million, with member sales comprising 64% of system sales, reflecting the effectiveness of digital strategies in enhancing customer loyalty. Benefiting from lower raw material prices, optimized rent costs, and operational streamlining, the second quarter restaurant margin improved by 80 basis points to 16.1%, driving a 10% increase in operating profit to 703 million US dollars, with the operating profit margin also up by 80 basis points to 12.2%. Diluted earnings per share rose 7% to $1.35, with second quarter diluted earnings per share at $0.58, up 5% and surpassing market expectations of $0.57. The interim per share cash dividend was $0.24, a 50% increase year over year, signaling strong confidence in shareholder returns. The company expects to add 1,600 to 1,800 net new stores in 2025, with capital expenditure projected at 600 million to 700 million US dollars, down from the initial 700 million to 800 million dollars, primarily due to optimized per store investment costs. Yum China plans to return 3 billion US dollars to shareholders between 2025 and 2026, with at least 1.2 billion dollars in 2025. Recommended buy price is $365, with target prices at $385 and $398, and a stop loss at $350. I do not hold the aforementioned stock.